back, everyone. My name is Ed, and this is the Soaring Dividend YouTube channel, where we're discussing dividends and other passive income investing. In today's episode, we're going over my top 5 favorite companies to buy during a market crash or correction. And these are companies that I believe in long down the road. So without further ado, let's head over there right now. All right, the first company we're going to look at today is Broadcom, ticker AVGO. Broadcom is one of the leaders right now in the semiconductor industry. It is currently at a share price of about $470 right now. It has an attractive yield of about 3% and a dividend CAGR, or dividend compound annual growth rate, of almost 51%. That is huge. I did not stutter. 51%. That's one of the largest CAGRs I know of any company, especially in the technology sector. I feel like Broadcom has so much room to grow and is priced right now is priced at a fair value. So I would get in there at an end price between $425 and $460. I'm currently dollar cost averaging into Broadcom right now, and I'm purchasing fractional shares. So if you want a leader in the technology space and a dividend, really good dividend paying company, Broadcom could do that just for you. All right, the second company I think you should look at right now during a market correction or crash is ticker ENB, Enbridge Inc. So Enbridge right now is a very promising energy company that operates in the liquid and gas pipelines industry. I have talked about Enbridge as well as EPD, Enterprise Products, in a video previously. Here's the link above if you want to check that out. They still right now have an attractive yield of over 7% and a great dividend CAGR of about 12%. Enbridge is still below pre-pandemic highs right now, and anywhere between $35 and $40 I think is a great deal for Enbridge. It has much room to grow, especially as they complete some of their up-and-coming projects with Pipe 4. So I think Enbridge is a great buy right now in the energy company. All right, before I go into my third company, if you get anything out of these types of videos and stock analysis, leave me a giant thumbs up as I continue to grow the content for this channel. I am also not a financial advisor. This is just for entertainment purposes only, and I do this just for the fun. So do your own research whenever you invest and be prepared to lose your own money. I believe in these companies and I see them growing well into the future. So if you see the dip, I recommend jumping on it. All right, all these yields and dividend CAGRs for all the companies I'm listing today, I calculate manually. Usually you can find them on Seeking Alpha or Market Beat, but I always like to calculate them manually just to make sure they're up to snuff and not out of proportion. If you want to know how to calculate them manually, comment in the description below and I'll be happy to help you with that. Otherwise, let's get to stock number 3. All right, the third company I'll talk about today is ticker LOW, or Lowe's. Lowe's is the second in command behind the giant home industry leader of Home Depot. Both are fantastic companies and I have both in my dividend portfolio long term. However, I picked Lowe's today because it has over a 15% lower payout ratio, so more opportunity to grow that dividend for the investor, as well as Lowe's is going through more recent automation and more efficiency practices. In my local town, they just added self-checkout and made the process 100% easier for me, and they had one less worker operate it, so it's also saves Lowe's money long down the road. Lowe's right now is at 1.6% yield and is about a 18% dividend CAGR, which is amazing. It just released a quarterly dividend increase of 20 cents, which is, as we know as dividend investors, that's huge, all right? I recommend getting into Lowe's between $175 to $190. That's the price target I'm looking at it. However, right now it's hovering around $195 right now in July of 2021. But if it gets below that $190 price, I recommend hopping on it too. All right, the next company I'll be talking about today, number 4, is Altria, ticker MO. I recently started a position in Altria because I realized that it is a dividend king, it has a great yield, and they're expanding into other industries, which is the main reason why I invested into Altria. They're going beyond their tobacco products because as ESG companies become more and more regulated and more desired, these types of practices are going to be how they survive long down the road, decades down the road. So right now they have a 7% dividend yield and a 7% dividend CAGR. I'm looking at a price range of anywhere under $50 to buy. All right, so the final company I'll be talking about today is ticker LMT, or Lockheed Martin. If you don't know what Lockheed Martin is, it's basically an aerospace and defense contractor. They have government contracts up the kazoo, and they constantly increase their earnings, and they're breaking earnings as of recent. And I'm looking at a price target of between $360 to $370. I'm going to be dollar cost averaging into this company because not everyone has $400, $500, even $300, $200 to spend on a single share of stock. They have maybe 100 or 50 bucks here and there. So dollar cost averaging can definitely be your friend in this case. Lockheed Martin's yield right now is hovering at 2.75%. So it's a very decent yield to have right now. And their dividend CAGR is about 9.5%. So really promising dividend CAGR, especially if you're looking at dividend growth companies. So Lockheed Martin is definitely something to keep your eye out if you're looking to have a government and defense play in your portfolio. So that's the fifth and final stock I'll be talking about today. If you get anything out of this video and you like similar content, and if you like videos that are a little bit quicker, like under the 10-minute mark, let me know in the comments below, and I'll take all that feedback into consideration when I release my next video. As always, stay safe, everyone, and have fun navigating those choppy waters.